Hello everybody. So today's video is to address a common point that I see being made all the time on Twitter, which is people should go all in on Bitcoin, forget about stocks. And so the idea of this video is kind of tell you my views about stocks, and are stocks still worth it? And spoiler alert, as you probably can guess, my view is yes, stocks are definitely still worth it in my view. This is no financial advice ever on this channel, as always, just entertainment. So let's start with today's entertainment. This channel is called Beat The Denominator. Why? Because I want to beat this. I want my returns to beat the denominator. And so maybe 10 years from now, the denominator is going to grow at 20%, and the goal of the channel will be to outperform the denominator with 20% per year return. Right now, my goal is to outperform 15% per year. 15% per year in dollar terms. And so why this hurdle rate? This hurdle rate is the money stock, the money that floats in the financial system, that sticks to your houses, sticks to your TV dinners, sticks to your grocery stores, sticks to our bonds, sticks to our stocks, our cars, and the value of our labor, our income. The money stock, the money supply, how much money there is in the US financial system, which is about 22 trillion right now. It sticks to everything we know, everything we love, everything we do, everything we buy. And that money stock, it always grows. It keeps growing. Why does it keep growing? Because households refinance their credit card, cities and states refinance their national debts, companies refinance, roll over their maturities. They have beautiful ways to say it, but essentially we always issue more debt to pay the old debts. This is why M2 keeps growing, and M2 always grows, and M2 is one problem. Another problem is that we really don't know how much debt there is in the system because of what's called foreign-held dollars. There's a lot of foreign-held dollars that are outside of the US financial system that obviously make their way all the time back to the US via international trade, via international transactions. So we really don't know how many dollars there are out there. When I made these early videos where I try to estimate it, it's probably somewhere between 50 and 60 trillion, and that's just dollars, and you also have foreign currencies, other currencies. The commercial banking system is responsible for the creation of most of that money. Sometimes the central banks will create that money during periods of crisis, and they'll print it digitally, as Jay Powell says, in periods of crises. But in normal times, outside of a crisis, it's just the commercial banking system. Remember, for the longest time, the banking system used to have a 3% reserve ratio. Right now in the US, that still hasn't changed. It's still a 0% reserve ratio if you're into the nitty-gritty of this. The goal is to outpace that money growth and that money stock. The goal is to outpace, right now, what I estimate to be 15%. And if you don't outpace 15%, if your return is 15%, in my view, you've just kept up. You've only kept up. You've not made any real return. You've not made any real return in real life. And what can I say about the indices and people who invest in the indices, except that it's not really first principles thinking to look at the indices, because people looking at the indices, and you see this a lot in the FIRE movement, they may look at the S&P 500, for example, since January 2010 until today. Oh, you've made almost 14% in the S&P 500, 13.94%. Well, look at the money stock on M2 alone since the events of 2020. And calculate if you're there, and you'll see you're not there. You're not there. We're never gonna get back to a 15 trillion in money stock that we had 5 years back. The money stock keeps growing. It keeps growing. So in other words, S&P 500, in my view, say 13%, 13.9, granted, but S&P 500, you don't beat it. You don't beat the money stock. You don't beat the money supply. Money supply grows higher, and we don't know how many dollars are held abroad, which is something I keep talking about. People estimates, they always come up with their best estimates, but it's blurry. That's why Bitcoin is such a revolution, because Bitcoin, we know how many coins are out there at all times. We know, right? NASDAQ beats it. NASDAQ barely beats it, but it beats it. So the NASDAQ, in my view, is better than S&P. So let me keep going. Quick view about real estate. quick point about real estate. The last time I did these kind of holistic videos about my investing styles, I said I'm not into real estate. I don't touch real estate. I find real estate to be a lousy investment. I am almost fully out of real estate. So let's look at real estate over the long run. And by the way, it's a lousy investment, but it's also volatility. When you think about Sailor and getting rewarded for the volatility, I see a lot of volatility in real estate. Like there are some people, if you bought a house in 05, 06, depending on your area, you may still be flat compared to 05, 06. So anyways, going back to January 1987, to September of 2024, I use Grok here. It's always easier than to do it by hand. I just ask Grok. The return is 3.69% a year for this 37-year period. 37-year period, the return is plus 3.69% per year. And that doesn't include your taxes, that doesn't include your insurance, and that doesn't include your maintenance. And so how much do you set aside for that? Is it 5% of the value of a house a year to pay for all of this? Right? And if you don't think so, maybe you're not taking into account that your taxes, your insurance, or your maintenance may be going up. Or your maintenance, many people have not updated what's the cost of maintenance, i.e. when you have to change the roof. Have you looked up the price of replacing roofs lately? Well, guess what? The year you replace that roof, you have 5 years of those returns that are going to be entirely gone. So in my view, it's very hard to justify owning more than the house you just live in. And even then, I can objectively make calculations and come up with the fact that in most areas, it makes very little sense to actually own a house and perhaps you should rent. A house is an expense, in my view. No financial advice, just my view. And a lot of people are realizing that, by the way. A lot of people are exiting real estate and realizing that today and moving into hard asset. So this is where we get back to my buckets, my free buckets. I've made a few videos about my free buckets. My free buckets, what I want to invest in is Bitcoin and Bitcoin derivatives. Bitcoin is a macro bet. It's a bet on the decline in money supply. It's the bet on the money supply, just a decline in the value of the money, right? So it's a bet on the increase, actually. It's the bet on the increase of the money stock. So it's a bet on the money supply and the decline of fiat. That's what buying Bitcoin is for me. And so in this bucket, I put Bitcoin and Bitcoin derivatives. Now, I've been into Bitcoin longer than these stocks. Today, we live in a wonderful world where you can get exposure to Bitcoin by buying shares, right? But go back to prior to 2020, that was nearly impossible. Prior to 2020, the only game in town prior to 2020 was pure form. But today we have other options. So MicroStrategy is a big stock that I'm on, and some miners. And ideally, I'd like that bucket to be 33%, a third, ideally. Right now, MicroStrategy is not helping. It's frankly, it's been life-changing. It's the biggest bucket for me right now, bucket number one. But eventually, I think things will equalize. I believe a stock like Tesla, for example, will pick up. I'm still as bullish as ever as HIMS and on a lot of the stocks that I talk on the channel. So bucket number two, what is bucket number two? Quality stocks always starts with quality, but undervalued quality stocks. So essentially, my assessment of quality here, if I'm wrong, I'm protected because it was undervalued to begin with. So it's an undervalued quality stock. The stock needs to be of quality in my view, but also undervalued. That's bucket number two. A lot of you view my videos with the spreadsheets, my Patreon, when I have this long screener spreadsheet. That's bucket number two for me, trying to find a high, and by quality, by the way, I mean high growth. High quality growth company. And so that means a lot of the old world companies that people love, I'm never going to touch because they don't grow enough for me, but also undervalued, right? And that would be an example. Say HIMS is a stock I covered. Nubank is another one, right? Mercado Libre, I haven't covered it in a while, but it's a steady Eddie stock that I think I sleep just fine owning that company. And then I have bucket number three, which is highest quality stocks. And remember, I mean high growth. To me, high quality means high growth. I cannot conceive of a stock that doesn't grow revenue less than 15% a year to be quality. And that's compounded, right? I want to see 15% a year over multiple periods of time, over 5 years, because I know you have cyclicality. Stocks can have a down year, but overall it needs to grow. So, but I buy the growth, I buy the growth, and I just don't care about the valuation. So highest quality stocks, regardless of valuation. And that's my third bucket. And that's a Tesla. That's unfortunately NVIDIA, which I sold. I don't own it anymore. I still own Palantir. So so that strategy really comes into mind if you think that I still own Palantir. And it's really regardless of valuation. CrowdStrike, right? That's another one that I really like. I haven't covered it in the channel too much either. So, and by the way, when there's a winner, I mostly believe in the tin can strategy. Not always, right? You want to do some research every year, but I believe that once a winner is there and you've decided you don't want to pay the capital gains and you just want to hold it for a long time, just let it run and forget about it. And frankly, most of my best investments, if not all of them, have had to do with that tin can strategy. Just buy it, forget about it, let it run. That's why, like for example, my MicroStrategy, I'm so overweight on MicroStrategy right now. I believe it would be a major mistake to just sell it to go buy even a Tesla, right? I'm just letting it be this high. That's how the way I do it. So now let me conclude a little bit this video. If all companies started a Bitcoin strategy, like Saylor is saying they will do eventually, and I believe they will do it eventually. So if more and more companies started a Bitcoin strategy, there would be less of a need for bucket number one. Bucket number one is so big right now. If your stocks own Bitcoin on the balance sheet and save in Bitcoin, and kind of think long and hard as to why they are doing buybacks and maybe do way less buybacks, of course, you wouldn't want a stock to ever do a dividend because of double taxation. So dividend are even more out of the question. But hopefully these companies, if they had a Bitcoin treasury, they would be less inclined to buy back stock when the company is trading at all-time high, and they would just keep and store the value in Bitcoin. So bucket number one, as more and more companies start holding Bitcoin on the balance sheet for the long run, bucket number one kind of goes out of the window and is less important of a bucket. And then in that scenario, then it's really MicroStrategy. You really hope at that point will be a Bitcoin bank and will start actually earning a yield on that Bitcoin on blockchain rails and via lending to too big to fail banks, lending to the JP Morgan of the world, lending to states, etc. So hopefully past 2030 they'll do that, and there will still be a need to own MicroStrategy. But I think if we move forward and every company starts holding some Bitcoin on the balance sheet, then pure form will be my main bucket number one over time. But I do still believe that MicroStrategy will become a Bitcoin bank at some point and start monetizing the Bitcoin when the arbitrage strategy doesn't work anymore. So that's the point right there. And so I forgot about this slide. So let me show you this slide, by the way. So are stocks still worth it? Yes. So to me, stocks are still worth it 100%. And they are still worth it if they are growing super fast. So a stock, in order to still be worth it, a stock needs to take in more fiat than is being debased each year. So you can see this is the fiat, like I said, grows at 15% a year. All of the stocks that I show you here, they have grown more than 3 times the money supply. So if you look at HIMS, it's grown 3 times the money supply over the past 5 years. The quarter-over-quarter growth has been well above 50%. The growth on HIMS has actually accelerated recently. If you look at NVIDIA, you can see an inflection point, right? Semis are a cyclical industry. You can see an inflection point, and you can see outstanding growth over the past 6 quarters. So if you look at NVIDIA for the past 5 years, the growth has been also well above 50%. And say if you look at Tesla right now, we are in a period of flat sales. But if you go back ever since they've been public, if you go back to almost 14 years, Tesla actually grew their sales at 44% a year on average. So 44% a year on average. So you're right at a 3x 15%, right? I mean, that would be 45, so 44. You're at just about 3 times the money supply. So Tesla, for example, has been growing at 3 times the growth of the money supply. HIMS has been growing at more than 3 times the growth of the money supply, and NVIDIA has been growing at more than 3 times the growth of the money supply. So in my view, this type of stock still entirely is worth it. no financial advice. So now let me conclude. Like I said, so like I said, as more and more companies turn that money, turn the fiat into Bitcoin, they become more and more of a hybrid derivative, which, has some of the debasement features of fiat, i.e. they still need to beat the revenue growth, they still need to beat the fiat growth in revenue, but they also become more and more Bitcoin derivatives. And I think in the future it may make sense that companies get valued as how much Bitcoin they own on the balance sheet, and maybe we have new forms of enterprise value where we not only remove the cash, but we also remove the Bitcoin from the enterprise value to actually assess the value of the business. I believe, like I pointed out with these three, so you see these three, this is the revenue line, these three stocks, for example, they more than outpace the money stock, more than outpace the growth of money stock. I believe there's a lot of opportunities that will continue to do that, and we'll continue to find them. So for example, if you look at AI is a major opportunity right now. Right? If you look at a Tesla, most of the value of a Tesla is baked into the expectations of what self-driving will do, and that's why self-driving is so heavily discussed. When you look at Tesla is an AI company because of the self-driving. NVIDIA is all about deep learning and the rise of deep learning as a technology. NVIDIA is just selling out all of its GPUs to all of the companies that want to implement AI. AI is the new electricity, and NVIDIA is providing the tools for the picks and shovels in order for companies to implement AI in their own business. But beyond AI right now, there's obviously blockchain, but I treat blockchain is an innovation, so blockchain would fit in this framework, but I put blockchain as a separate bucket where it's just money. In my view, I just view it as money. But I think businesses in the 21st century recognize opportunities not just via AI, but also via adopting 0-to-1 strategy, right? The famous Peter Thiel book that kind of, all of the stocks that the PayPal mafia started implementing, and Peter Thiel was, of course, the big boss of the PayPal mafia, as Forbes used to call it. These 0-to-1 strategies are all about the new way of doing business. The new way of doing business in the 21st century has nothing to do with how companies used to conduct business in the 20th century. And it's all about taking advantage incumbents that are facing the innovator's dilemma and that can't get out of their own way, that are myopic, that have managers that are myopic, that can't see opportunities, and they can't get out of their own way. And so they get disrupted by leaner, meaner companies that are just going all out and that are going for the monopoly. Which, if you read 0-to-1, I mean, it's a book I need to reread. I haven't read it in a few years, but I need to reread it again. If you had a list of books for investing that you need to read once a year, that would be one of the books, right? And so what examples do we have of 0-to-1 moves? It's for example e-commerce versus retail, right? E-commerce is still, it's well on its way, but it's still a disruption that is majorly affecting business. Much of my thesis on HIMSS, if you follow my videos on HIMSS, much of my thesis is about HIMSS disrupting retail pharmacies, disrupting CVS and Walgreens, and disrupting the fact that we don't need physical pharmacies anymore in the era of e-commerce. But you have other 0-to-1 disruption. You have the issue of automation versus human labor. How many companies just leverage automation, and by leveraging that automation, they're able to just outcompete entirely any company that is based on human labor. The best comparison that I have for this is Tether, the stablecoin issuer, and comparing Tether to, say, any major traditional finance company. The striking comparison is Goldman Sachs makes as much money as Tether. Tether has 9 employees. Goldman Sachs has 45,000 employees. Right, so that's an example of that. Automation versus human labor. You can take advantage of that, and these businesses that implement these opportunities, in my view, will grow much faster than the money supply. And of course, you also have disrupting margins. You may have heard that quote: "Your margin is my opportunity." The whole business model of disrupting a giant's margin. You enter the market. You break the price. You break the prices of that market. And you can do that with low to zero marginal cost business models. So the best example of that is Spotify. You know, Spotify arrives in a porcelain factory and just throws a wrench in the porcelain factory. And so you had music, and music used to cost, you know, $10 a CD. The teenager, the 20-something in the 80s, in the 90s, they would spend 20%, 15% of their income listening to their favorite music. And today with Spotify, it's free. And if you really can't stand the ads, it's less than $10 a month. And so how many orders of magnitude cheaper is Spotify? Well, I calculated it's about 6 orders of magnitude cheaper than buying music. So the company comes and just throws a wrench into the old business model. One of the big debates I follow right now is, what is AI going to do to the movie industry? Wow, what is AI going to do to the movie industry? And so we have everybody saying, oh, well, AI movies are never going to be a thing. And I've seen more and more recommendations on my YouTube from a bunch of people just making AI trailers, AI movies, fake AI commercials, and it's frankly so much better. It's literally perfect. You literally have perfect characters, perfect scenes. Right? Elon Musk has been tweeting recently many of his AI-generated mini-films, and I think that's going to be a thing. So there's many areas where you have a rent-seeking business model that uses patents, that uses copyrights, and then you have a newcomer just comes and throws a wrench in the business model. And this is what 0 to 1 taught, right? This is what 0 to 1 teaches you to do. It's the whole idea of this book. You gotta grow, and you gotta grow very quickly, and you have to be one order of magnitude, at least one order of magnitude better than the incumbent. So you have to be 10 times cheaper, at least 10 times cheaper, or the same price but 10 times better. Or if you have 10 times cheaper and you're 10 times better, then you're 100 times better, then you're 2 orders of magnitude, right? Spotify is less than $10 for 100 million songs, when for the longest time it was $10 for 10 songs, $10 for 10 songs, $10 for 100 million songs. There's no hope to compete against that, right? That's the story of Tesla. Fueling a Tesla is $6 of electricity. $6 of electricity versus $60 of gas. You can't compete against this type of business model. That's the model of Netflix. Anyways, I get so excited about this stuff. And of course, Bitcoin itself is a 0 to 1 innovation over fiat. But there's many opportunities outside of just the revolution of finance, even though the revolution of finance is definitely one of the biggest opportunities right now. And I believe right now, Bitcoin is definitely one of the biggest opportunities, as big, if not bigger than the internet, very much likely bigger than the internet. But there's other major opportunities. One that I don't have time for this video that I could have put, of course, is the big field that it's going to be my goal for 2025. My goal for 2025 is going to be doing that deep dive onto the genetics, onto CRISPR therapeutics, onto all of these companies, right, who quietly cured sickle cell disease. They're quietly working on some huge diseases, and I want to be into these stocks, right? We saw GLP-1s. That's another thing. So there's so much innovation right now. It's like, I don't want to sound like a Cathie Wood, but there's so much innovation right now. There's so much good happening, which is why I think there's many opportunities that you can buy where you actually beat the money supply. And all of these opportunities would be so much better if they added Bitcoin in the balance sheet, which, by the way, if you know anything about Tesla already did that. They are one of the biggest Bitcoin holders, and so hopefully they start accepting Bitcoin as payment as well soon again, right? And anyways, sorry about the rambling. I'm done for this video. So this was not financial advice, not investment advice. This is just entertainment, hoping you were entertained. Please like, please subscribe, follow me on X, follow me on Patreon. Thank you for watching, and have a wonderful, wonderful day.